What's going on, everyone? So we got to talk about what's happening inside the market with Bitcoin right now. I mentioned this on my last video talking about how we were breaking a key level, and we broke that level, and now we're actually on our way down. You can actually see it right here. We crossed over here on this little trend line and also broke that support, and now we're heading towards the support here at 92K. And also, we also have to mention the Fed. The Fed is about to do their interest rate decision on the 7th. So on the 7th, we're going to get that Fed press conference. They're going to make their interest rate decision. A lot of people are predicting that they do not raise interest rates and that they have it laying stagnant and they leave it and pause it for the next time around. And if that happens, a lot of people are predicting us going down pretty much. And the problem with this prediction is that if everyone thinks it's going to go down, a lot of the times the market goes up when everyone thinks it's going to go down. And then when everyone thinks it's going to go up, it goes down. So a lot of times the opposite happens a lot in the markets because, the actual big money, they know what retail traders are going to do. So they're always trading against the masses. And right now the masses is pushing this up higher and higher and higher. People want to see this being successful. Like just look at this, right? People are just pushing it and pushing it and pushing it and pushing it. It went almost to 100K. It stopped right before it hit 98K. So we're going to talk about this. Remember, I'm not a financial advisor. None of this is financial advice. But yeah, this is crazy. This is absolute craziness right now. We're at 94K. You can see over here, everything else is going down. Everything is literally going down. Everything's in the red. So leading up to this meeting, we're kind of already pulling back here. So I want to see how much further we pull back because I mentioned in that previous video that I made that we were going to break this key level. Well, we did break the key level, and I was like, look, we're going to continue to go down here until we reach the support at 93K. So we have to wait until that support. And if you actually look here, we hit that support here. We hit it very briefly here as well. And you can see we used it as resistance as well before. So this has always been a very key level for us. Even looking back here, March 2nd, it was a very key level of resistance. March 5th, a key level of resistance. Some support here. February 24th, more support here. 18th of February. A little bit more support here, even though it broke it in the 2nd of February. And then you can see it was kind of used as support here as well. Support here as well, and so on and so forth. We've used this level multiple times inside of the past, and then resistance here, and then that's pretty much the end of it because that's as long as we've been at 90K plus. So this has been a very significant level right now. So that's going to be very strong support for us. I reckon if we pull back down to that support, we'll probably end up bouncing pretty hard. So that's what I got to say about that. Now, you can even see here on the volume. The volume told us everything we needed to know. We are in selling momentum right now. You can see some buying is coming back here on the volume indicators, and you can see this curvature going upwards, right? And then you can also see the RSI curving upwards as well. It's crossed here at the bottom now. It's curving upwards. And you can also see it here on the MACD. The MACD has crossed. It's also turning upwards. You can see those green candlesticks coming in, indicating that there's going to be more volume. So leading up to the meeting, you're probably going to end up seeing something like this, us going closer and closer back towards 95K. But if they pause interest rates and the market reacts negatively to that, you're going to see it going down to 92K. And then you're going to see it trying to bounce back up and then getting rejected and going down to 90K. And then you might even see it going lower than 90K just based off of that one meeting. So we have to be very, very cautious in these times. And what I kind of want to do is make some supports here. So that's what we're going to be looking at now. I want to show you guys where I believe we're more than likely going to end up going after 90K. If we are to go all the way down to 90K, where do we more than likely end up going to? So you can already see where I got my mouse set up, right? At 88K. So 88K is definitely one of those lines. So we just take the horizontal line here, and then we take it to the top of this candlestick here, this candlestick's here, and these candlesticks here, and then we go ahead and place it right there. Those were some key resistance levels. This is minor resistance, by the way, or minor support, because it was resistance. Our resistance then becomes our support and vice versa. So in this situation, we're going to have to use that. as support. Let's go ahead and look at the 4-hour chart. So as you can see, we now have this area of support that I've set up here at 88K. I'm very, very heavy on support and resistance trading. I use support and resistance trading in conjunction with trend lines, wedge patterns, as well as doing the RSI and the MACD. I keep it very, very simple. That's how I do it. I don't like to do anything else but volume, RSI, MACD, trend lines, wedge patterns, support and resistance, and Fibonacci retracements. And Fibonacci retracements track major support and major resistance levels. So yeah, that's pretty much all I like to do. I don't like to be the type of person that has like 100 indicators on there, right? There's a lot of people that will do stuff like that. But anyways, this is what we got set up, right? And we got minor support here at 88K. If we are to break 93 and then 90, we would go down to 88. And then from there would probably be a huge drop. A huge drop, kind of similar to back here, how we went straight from 92 all the way down to 76, because there's not much like major zones from 88K all the way down here to this previous level down here at 76K. There's not many major zones that we can see. And you can kind of see I had some minor zones set up here. So you can see 86K is another one of those minor zones that I set up. And I set that up pretty much because of this. We have 86K resistance, and then we had the same 86K resistance. And then you can also see a little bit of resistance here. So you can see the tiny amount of resistance in these levels. It's very, very minor. So I'm really not going to mark that on the charts because it's a very minor level of resistance back then, which would then become support. So we'll have minor support at 86K as well, but 88K is what you more want to look towards. Because if we break 88K, you better bet we're going all the way down to 76 to 73K. So you better hope we don't break 88K. So that's what I got to say about that. You know, some people probably don't want to hear that, but it is what it is. So that's what we're looking at there. And then according to what a lot of people are talking about, like they're not expecting the Fed to lower the interest rates. So this is something that a lot of people have been talking about. So let's go over this now. U.S. Fed expected to extend pause in rate cuts. The U.S. Federal Reserve is widely anticipated to maintain its current stance on interest rates this week and will refrain from further reductions, despite demands from President Donald Trump to lower rates, according to observers. And the reason why this is so important is because if they lower the interest rates, then that means it's cheaper to borrow money. If they lower the interest rates, if they raise the interest rates, it's more expensive to borrow money and people aren't going to do it. So they want to incentivize people to borrow more money so then they can boost the economy and so more money can flow inside of a bunch of different equities, flow inside of a bunch of different products. Because think about it, people are now able to take out more loans, right? They're able to use their credit cards a little more freely. They're able to get house loans and all this stuff. And in conjunction, that's going to end up boosting the economy in the said areas, and that will flow into stocks and crypto because the consumers are going to use more credit and they're going to boost the economy by spending more money that they're borrowing, and it's going to end up in the hands of big money. Like it's going to end up into the hands of these big, large stocks and these corporations and crypto. So that money will flow more freely, but they're going to end up pausing. And that's what most people are predicting, that they'll end up pausing. All right. It's not 100% sure, right? We don't know. Like that's what they're predicting. But anyways, the Fed has held its key interest rate at between 4.25% and 4.50% since December as it continues its plans to bring inflation to the bank's long-term target of 2%. So they're trying to get down to 2% in interest rates. They want it extremely easy and extremely cheap for people to borrow. Now, it says the agency is expected to conclude a two-day policy meeting on the coming Wednesday. Federal Reserve Chairman Jerome Powell and other officials have signaled caution, waiting to see the evolving impact of the Trump administration's tariff policies. So Jerome Powell, the Fed chairman, he pretty much wants to wait until the second quarter so we can see like what is going on, because January, February, and March is the first quarter, right? It's the first quarter for like all these financial places, like January, February, March, and we just had earnings in the stock market for all those. And now we have April, May, and June, and that information comes out in July. So in July is when we'll know all that, and that's really what Jerome Powell is waiting for. He's waiting to see what happens. And yeah, this could be bad or it could be good. We'll see. But it says Trump repeated last Friday his appeals to Powell to lower interest rates. He also stated that he would not remove Powell from his position before his term concludes in May 2026, which he can't remove him from his position anyway because he doesn't have the power, because the Federal Reserve isn't a part of the U.S. government. But what I will say is, I think he's trying to be nice to Powell now, so Powell might lower the interest rates, trying to give him a hint as like, when your term's over, I might reelect you for the, something like that, a little bit of a hint. But yeah, we'll see. We'll see. But yeah, this is all over all the media outlets. They're all talking about it. This is pretty much the big thing that's going to be happening. It's going to be Wednesday, May 7th. You want to pay attention to that because that is going to decide whether we're going up or down. And look, if they pause the rates, they don't cut the rates, we are probably going to end up trending downwards. Let's say they raise the rates because if Jerome Powell just wants to be, mean to Donald Trump and just raise the rates, you're going to see it crash. Everything's crashing, which they're probably not going to raise the rates. They're not in that position right now. And it's really between them pausing it and lowering it. If they pause it, it's going to go down. It's not going to be a steep trend down, but we already expect it. So the market is kind of already pricing in that price action. We went from almost 98K all the way down to 93. The market is pricing it in prematurely. So we're not going to drop as much. You might see it going to 92 or 90, and if that, and then breaking down to 88K before it tries to make its run back up. So you might see something like that if they just pause. But let's say they actually lower interest rates, we're going to probably end up seeing a nice big push in Bitcoin, getting us above 100K. So if they actually lower the rates, you're going to end up seeing it pumping a lot. So this could be good, but right now, most people are predicting that they don't do it. So that's what people are waiting on, and that's also what the market is pretty much pricing in. That's why everything's downtrending right now. So it is what it is. I'll keep you all updated on this. But yeah, this is pretty much all I got for you all today. Remember, I'm not a financial advisor. None of this is financial advice. Definitely hit the like button and subscribe. All that good stuff. And as always, I'll be back with another video.